General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock out Monday. I do got to look at the what happened with the news, and there's just too much news going on throughout the day to keep up. And then you got to look at who's saying the news, because they got ulterior motives. Because it's that time of the year. I actually like it when I put the word here. It looks better. Then I like it when I do this too. I like aesthetics. I don't think it's no news tomorrow. Let's go Forex Factory. Tomorrow. Do I got it on orange? I do. Yeah, no news tomorrow. Let's look at the CME Fed watch. There wasn't even no economic news today, but I don't know the yields are kind of play into where they thinking this will go. Because I know this kind of tracks with, we went up to 50%. Crazy. This is crazy. 50% rate cuts are on the menu. Rate cuts for May 7th have officially came on the menu. Wow. 50%. It's 50.2%. We probably had 100 for June. 80. That was about what it usually was. Well, it was this. Let's be real. I think it was like 70, hanging around there. But it's like big cuts coming in now. 80% for June. Earnings, go back. Banks is Friday. I remember that. Let's see what Tuesday. I don't know any of them companies. No, I know Tilray. I'm not, it's not like companies just be like, oh, this is going to move the NASDAQ. The only thing moving the NASDAQ right now is tariffs. Not going to affect the NASDAQ. Let's look at dollar on the daily. Okay, dollar started this candle already. Okay, we're coming up here. So we didn't run this low. This low is really important. Matter of fact, let's clean this up because we're just now taking this candle sign. Could we be turning around for the dollar? Light blue. I like that blue. Still got a target down here. Is this retracement for the dollar? Where will we stop saying that this is retracement? So we're kind of in premium. Dollar digging into premium. This will be the order block we would have to watch. Take this off. Yeah, we can do that. Take that off as well. This is the low that we broke here. We actually just broke that here. Yeah, running this candle does make sense. Could just be retracing in the premium just to touch that daily order block. The market pushed up today. I don't know why. I kind of wanted to turn around. Trace the premium. Watching H. Oh, it's not an H1. The daily minus order block. Daily bearish order block. See what today on NASDAQ. Weird. Okay, yeah. Opened here. Pushed down overnight. Pushed up throughout the day. So new week opening gap here. What is this? Wednesday. The inefficiency from Wednesday. Gap down to start the new week. And pushed up to the old. What was that? American Liberation? America Liberation Day gap. from last week. Man, if the volatility been high, but it's still plenty of opportunities. Hold on, wait. Let's go here. This is this Friday. Just that's dollar. So this has a more significant gap down. Big gap down on NASDAQ. And a slow, choppy push up. Note the wick. It's happening to the fair value gap. The bag is left untouched. Okay. Weekly, we got a we're creeping. I don't want this week here no more. This is an old week. Hold on, wait. Is this a monthly week? Nope. I want this range high. I believe this is a monthly range. Boom. I was watching this. This is where I want to track. I believe it's this level. Top right, this is range high. And I'll keep this here. Okay, still in the old monthly range. December 23rd low swept. Pretty sure I hit my weekly objective too. No, we gapped down past it. That's what happened. Still in old monthly range. I'm not expecting too much from this week due to CPI on Friday or Thursday. I feel like we can chop on Monday, in Monday's range. Until then, go to the daily. Okay. Nope, we still got our target here. So, retracement day Monday. Wow, this is a huge. Okay, I was going to say, why didn't I get in up here? But that's what. Okay, Monday's candle. Monday's high and low. Playing quadrants of that. think the volatility is so high. It's like I'm not sticking my toe in that water. I remember the alert going off to retracement objective. Looked at the chart. It's melting. No retracement. Could Monday be the high of the week? I'm not pushing it. Since it was a large range day, I want Tuesday to be a smaller range and use Tuesday high and low as liquidity to push price outside of the range. I don't think I want to hold any weekly positions unless structure is clean and one directional. This is scalpers territory. H4 gap here. Just make this yellow. It's already got a yellow. Let's make it blue. Oh, that's actually kind of nice looking. Fake bullish until we come and retest the bullish level. We do have us a 4-hour fair value gap here. We can keep that. Yeah. This is not real order flow to me. It's just a retracement. We can keep this here too. Let me see what this looks like on the lower time frame. Just in case I want to take it off. It's really not that bad. I just don't want to be caught up in it. This feels bullish, but it's fake bullish until price returns to a bullish level and respect it. This is a retracement market profile and macro order flow is still bearish. No news is driving this market. Pay attention to tariff deals. Yeah. Whether you want to or not, watch the news, and when them deals get settled, then you know whatever that news impact, that's going to be the direction. And you should be all right. As long as you ain't in your feelings and complaining, then you'll have a clear mind to be able to execute on the information that you are given. Because right now, you can watch the news, there's a lot of emotional people just calling the end of the world. And if you're rational, you can see the opportunity in what's happening. You can put yourself in position to get long-term calls or long-term puts. You can get some leaps. So bet on that. Bet on whatever you're thinking. I want to sit on the sidelines and wait for everything to get to all-time highs and then buy. Here, I'm not putting too much weight on where prices at now. I would rather see Monday high ran before looking for sales. In the textbook fashion. Put an alert on Monday's high and I'm going to target it too. Give me gray. Why's my okay. That's better. I didn't like the looks of that. Monday. Look for sales. Only way I look for buys is if we push lower. We're kind of around EQ. I believe this is the 4-hour fair value gap. Alert here. Look for a fair value gap. Look for buys. Okay, that gives me my levels right there. Targeting Monday's high. For Tuesday. That's just a target, but I really think we're just gonna chop some. Like I said, H4 fair value gap for buys. And Monday's high for sales. All right, that's that on that. Monday, April. Let's do underscore 4.7.2025. That'll work. All right, y'all. Y'all have a good day. Peace.